Let's talk about the equities factor, because obviously this is key here and crucial. Many analysts have come on saying, well, how long can this equities run last? Some predicting a 50% correction here on the stock market. Do you think it's only if and when a crash were to occur that we'd see a significant influx back into gold? Do people need to wait for the crash and they'd rather run the risk now?
The issue with the stock market and in any market is that you cannot predict timing. It's impossible to predict the timing. I think that there's a consensus that a good portion of the stock market seems to be overvalued. Now, can that still run higher? Of course it can. But if you look at history, you've seen these corrections happen. Now, if you wait until the last minute to protect your portfolio from that correction, you may actually miss it. Right? So the reason why gold is seen by many investors as a strategic component is because it belongs in a portfolio throughout. Now, you may want to increase your allocation if you expect uncertainty to be higher or a correction to happen, but throughout it's better to have a part of your portfolio that is there to help you if and when that correction happens.
Juan Carlos, let's talk about cryptocurrencies now. Many are thinking that part of the problem for gold has been Bitcoin. It's the thorn in gold's side, in the sense that investors who before speculated with gold are now turning to Bitcoin, to Ripple, to Ethereum. What do you make of the cryptocurrency play? And do you have any figures that suggest that these analysts might be correct here?
Most investors and most analysts are using anecdotal evidence to describe what is happening in the cryptocurrency space. Mm-hmm. The reality is that whatever flows may go into cryptocurrency spaces are coming from many places, from the stock market, from potential specific IPOs, from bonds as well. I mean, bonds haven't been doing as well. So I don't think that is fair to say, well, it's coming just from the one place or is replacing one particular asset. I think that many investors are putting money from various places. What is true, though, is that the role that gold plays in a portfolio is completely different than the role that cryptocurrencies will play in this particular point in time. I mean, the rationale for why investors may be investing in cryptocurrencies is completely different. So the role for gold remains really, really important. That's why you continue to see flows, not only in the US, but around the world, valuing gold.
So if someone comes to you and says, okay, so Juan Carlos, you don't think that Bitcoin has hurt gold at all, what's your answer?
What we believe is that the role for gold is different, okay, in a portfolio. And the reason why investors look at gold is for returns, as they have been steady returns, about 2% on average per year since 1971. Really important diversification, effective diversification, especially in times of economic corrections and stress. It's a very liquid market, extremely liquid, so liquid that central banks can actually come in and in well-established exchanges and in the over-the-counter market and so on. And then finally, the combination of those brings better risk-adjusted returns over time, and that is not going away.